What's going on, guys? This is Lior and welcome back to my channel. Now in this video, I'm going to be talking about one thing that I think Grant Cardone has wrong about investing in multifamily. Before I jump into that, two quick things. If this is your first time on my channel, smash me a subscribe, guys. I put out tons of new videos every single week, all about real estate investing. So if you want to be notified every time I do a new video, smash that button. And number two, if you guys look at the comments, I'll remind you at the end of the video, I have a free download of my cash flow analyzer for multifamilies. So if you want to grab that, grab that link, and you can get that. So let's talk about today's content. And here's the deal. I am a huge Grant Cardone fan, right? I've been following him for probably like 4 or 5 years now. I love a lot about the man. I think he's got a great work ethic, truly inspiring. But here's the deal. I think some of the messages he puts out there are a little bit flawed to a degree, right? And one of the messages in particular, as it relates to multifamily, he is very, very, very vocal that you should not be buying your first 2 or 3, your first investment properties at 2 or 3 family. You should not be, rather he thinks you shouldn't be buying anything less than at least 16 units or so. Now, here's the deal. I get where he's coming from, right? I get that he's all about going big, no making small moves, and 16 units is definitely a larger asset than a 2 or 3 family. It has more potential for cash flow, etc. But I don't necessarily think that applies to everyone. For some people in certain specific markets, agreed. But let's talk about why it wouldn't apply to you and if you were in that position. And first, I'm going to start by saying that I bought my first multifamily. It was a 3-unit building that I bought with an owner-occupant loan, right? So I took out an FHA loan. I house hacked, as it's called, the property, put down 3.5%. And let me tell you this, 4 years later, that's still probably one of the best properties I bought. I have, no pun intended, literally almost 10x my initial investment on that deal. Plus, I get a really, really strong cash flow from that property. So you can still do really, really well and learn a ton, and which we'll talk about in this video, from going at a 2 or 3 unit building rather than jumping into like something like a 16-unit building on your first deal. So let's talk about factor number 1, which is the type of market you're going to buy in / invest in, right? And here's the deal. I am from Boston, which has been one of the most prolific markets from an economic perspective. It's been growing like crazy. So many different industries here, a great population growth, great job growth. And I am super high on this market for the next 5 to 10 years at least, right? So I want to be invested in a strong, high quality market like Boston. Now, there's obviously plenty of other markets across the country right now that are growing and doing really well despite everything going on in the world, right? I mean, there's a number of southeastern markets like Charlotte, Atlanta. There's even some really strong southwestern markets. For example, Phoenix in Arizona has been absolutely blowing up. Again, both from population growth, job growth, from those kinds of perspectives. So if you live in a market that you know is growing, and you can tell from the data is growing, and you think in the next 5 to 10 years it's going to continue to grow, it's going to continue to expand, I think why would you try and miss the boat on that, right? I mean, if you're a true believer in that market, you'd want to be invested in that market as soon as possible, right? So instead of waiting for, say, to save them, a couple of years to save enough money down to go buy your 16-unit building, I would say jump into that market, again, if it makes sense to you. The other thing with this perspective too is if you are going to be investing in these markets, right, likely they're higher priced, right? So Boston's very, very expensive. Phoenix, Atlanta, they're starting to get very expensive. It's unlikely you'll be able to save enough money anyway, right, to buy a 16 units, right? Because 16 units in these markets can easily be $4 or $5 million, which would require at least $1 million of equity. Whereas if you go after a 2 or 3 unit, the barrier to entry is much lower. Like I said, I used an owner-occupant loan, so it allows you for 5% down options. But even if you're going to take an investment loan, you can go buy $1 million or close to $1 million 2 or 3 family, which would only require $200,000, which is, again, much lower barrier to entry from a capital perspective. Now, if you don't live in a market like a high growth market like Boston, like Phoenix, or any of these other markets across the country, maybe your market has kind of been flatlined over the last couple of years, not really showing a ton of growth, or maybe even people are moving out of it, then I think it's a different conversation, right? Because buying a 2 or 3 unit building in a market, like that, where people are escaping, that puts you at a lot of risk for vacancy. And then Grant's point is always, hey, if you're buying a 2-family and 1 unit's vacant, that's 50% of your income, right? So in a downtrending market, that's especially going to be prevalent, and you're especially going to feel that. Now, I wouldn't necessarily recommend even buying a 16-unit building in a market that's downtrending, but you get the point. Is first analyze the market. If you think it's a market that you're high on, that you can see growth on from a population, job, et cetera, and you have enough money to get into your first deal, I would say do it. Now, here's factor number 2 to consider with this is, yes, again, 16 units has more potential for success, more potential for cash flow, et cetera, but on your first deal, you're typically going to be on a steep learning curve, unless you've got like family in real estate or something like that, right? I remember my first 3 unit, I literally almost did not know anything, right? I mean, I got as educated as possible, but once you're actually in the weeds, you really learn how this business works, right? So I didn't know anything about contractor management, furnishes, tenant management, like really analyzing deals, understanding layouts of specific types of units, how they'll impact market rents. On the renovation side, what kind of finishes to put, what kind of finishes are appropriate, what do you need? And here's the deal, guys. You can make that kind of mistake on a 2 or 3 unit property because it's not going to be as magnified. But if you make that mistake on a 16 unit property, right? Let's say you're going to buy a value add 16 unit property, and you're going to do some renovations across the board in all units, and you think you've done a great job, and it turns out it doesn't really fit into that market scenario, you're going to be on the hook for potentially a lot of pain, right? I mean, that mistake is going to be severely much more magnified on the 16 unit building than the 2 or 3 unit building, right? On the 2 or 3 unit building side, again, you'll have a little bit more leeway. Not that you should really try to make mistakes, but again, likely you're going to go through some learning curves. You're going to figure out a lot of new things, learn new types of systems, businesses, and everything in between. So you really want to go through that path on a much smaller deal before you go out and put $1 million of equity, whether it's your money or investors' money, whatever it is, because you don't want to be playing with, you don't want to be making these mistakes and going on a learning curve when you're playing in the much bigger leagues. So between actually learning the business, right, and really understanding what you're looking for, what you need to look for, what you need to know in terms of, again, like we talked about, the quality, the finishes, the layouts, and everything it takes to really run a successful rental property and ultimately a rental business. Plus the fact that you're going to be learning from mistakes, and any mistake you make is going to be much more impact magnified on a 16 unit building versus a 2 or 3 unit building. If you take those factors into account, and again, take that with the first point I made, where at the end of the day, if you're investing in a high quality market, you should be able to do well. I think if you take all those points together, I would say I think it's still worth buying a 2 or 3 unit building on your first deal. You'll learn a ton, you'll figure out the business, and then if you really like the business and you want to expand your portfolio, boom, go after that bigger unit, right? But after that bigger building, maybe it's a 4 unit building, maybe it's an 8 unit building, maybe you go to 16 in your second deal. But I really like that progression because it really helps you build the muscle of real estate, and that's how I've done it, right? I started out with a number of 3 unit deals. I did my first 6 unit deal. Now I recently did my first 9 unit deal. Now I've accumulated almost 30 units, and now I'm looking at bigger stuff, at least 9 units. And that's kind of the natural progression because, again, I've made mistakes in the past. I've learned a ton, and I'm really glad I didn't make that on 9 unit deals, right, where there's a lot more money, where there's a lot more at stake as opposed to on a 2 or 3 unit deal. So hopefully that makes sense, guys. Like I said, I'm a big Grant Cardone fan. I think he's got a ton of value to offer. I'm not by any means saying don't listen to him. I'm just saying you got to take some of the things he says with some grain of salt. If you're thinking about jumping into your first multi, I don't necessarily think you need to wait to go into this huge play. it can be super overwhelming, especially when you're brand new into the business. So hopefully that makes sense, guys. And one quick reminder, like I said in the beginning of the video, if you're looking for a free cash flow analyzer for your first deal, grab that below. I put a download link and you can grab that for free.